Hello, everybody. Can you hear me?
We can hear you.
All right, good. And you can see my screen, right?
Sure can.
Okay. All right. I guess we might have had a little mix up on the invite, but nonetheless, we are here ready to go. And if anybody joins late, fret not. We've got a webinar recording in session. Scott's recording the session, and it will be uploaded to the YouTube channel later this evening if anybody did miss out. So, all right, we're just going to get right into it today. Well, we may only go 45 minutes or so. Let's take a look. First slide, just reminding you all that we are a content publishers, software as a service subscription business model. So anything you see or hear in here should not be considered investment advice. If you're looking for investment advice, you can work on your registered investment advisors and the guys who have the brokerage licenses to allow them to give out investment advice. So just a common reminder on the first slide, please don't construe anything you see or hear in today's webinar as investment advice. You need to seek out the right people for that one. All right. Just a quick slide on all of the onboarding and all of the ideas that we help keep people going with throughout the week, starting primarily with Barry's live trading room. You can see on the right-hand side of my screen here. Barry's opening his desktop to everybody, and free is the price, and free is always a great price. And I tell you, the quality of this room and the content coming through there is giving a lot of chat room type webinars or live rooms, trading rooms, a real run for their money when you consider the Trade Ideas room is 100% free, and other rooms out there are trying to exist off of subscription. So a great place to come and learn. Barry's using the Trade Ideas platform, as you can see, and demonstrates it from bell to bell during the week every day, and does a great job of moderating the room, as well as keeping tabs on everybody and making sure the room stays focused. There's a couple of really good traders in there as well that are a great place to come and learn. So if you're a new trader, you really should be surrounding yourself with the osmosis of successful traders, and the live trading room is a great and free place to get that done. Well, beyond that, we have the afternoon webinars like you're hearing right now. The afternoon webinars usually occur around 5 p.m. Eastern, and they are different each day. Yesterday you had Jamie. Today, Tuesdays, I'm always taking the seat and trade of the week theme. Wednesdays is typically Dan and Brad, and Thursdays Andy takes the lead and has Jamie helping him as well. That's aftermarket, 5 p.m. Eastern every day, Monday through Friday. The Friday support sessions are one more thing that we're doing to really try and get people up to speed as quickly as possible using our very intense Trade Ideas platform. And we recognize there's a lot to learn. And sometimes if you're just signing up for 1 month and kicking the tires, there's a lot you can learn in that first month. So we created the Trade Ideas University series. It starts on Monday with all the basics and runs through Thursday with a lot more advanced stuff. So we have a great turnout every week. We turn it over and have a new class that comes in, and they get all the information they need just by coming in, watching, and asking questions in the same format we're doing right here, the old GoToWebinar format. So all of these things combined, we really feel we're giving a great head start for education for traders and a concierge and onboarding into our platform. A little follow-up to that Trade Ideas University I mentioned. Again, we have 4 classes that are broken down, just a much easier way to do the training. As we are growing in users and employees, we had to go to more of a group effort. So that is how we're doing things today, these days. If you certainly needed a one-on-one 1 hour where it's just you and us, that is available, but it is a $99 session. You can book a one-on-one training session with an expert instructor. That's available as well. And then just a quick user base, net subscriber growth. We thank you all for embracing and using and giving us great feedback on the product. And so let's get into the topic this week, which is always the trade of the week for us. And I want to remind people that we're talking about Trade Ideas as a technology platform here. And when it comes to technology, a great quote is that no man is better than a machine, and no machine is better than a human with a machine. And that's who we are. We've got the machine and Trade Ideas, and we have the human being for discretionary decision-making processes. in the end, that's really going to work best when humans work best with machines. I mean, if you think about AI in the health industry, if you do any research on Watson and the oncology research Watson has done, Watson didn't replace the oncologists and the researchers. They just helped aid them in pointing them into a much more interesting circle of data. And so that's a great example of how IBM Watson works with humans and machine in helping those oncologists find the proper DNA sequence leading to the best, most efficient cancer treatment, which is different for everybody. So just a little offshoot there of why I feel that's a very important quote as we move forward into our new future with robots and machines and AI. They're not going to take over. They're just going to help make things easier for us, and that's what our AI is doing in the stock financial tech world, primarily here at Trade Ideas. So here's our agenda for today. We'll look at a market recap. A decent day today. No harm, no foul. Andy's got some ideas to talk about a few things that stuck out to him today in the Holly AI channels, the 3 different segments. I want to show you, I went ahead and screenshot some back office performance charts to kind of bolster a theory or a proposal I want to make or an observation that I've had, and I think the visuals I have will help support that that theory. And then the trade of the week this week, it actually did trigger. It's kind of a different trade of the week, and we'll talk about why. It was a new issue and definitely volatile, so we have to be aware of that. Might even check in with the last trade of the week, which didn't fire, and I'll have a possible second round 2.0 possibility on that one, but we'll get up to all that. I kind of like the last couple of webinars where I left you guys with some parting gifts, basically setting some price alerts. And so I've got a few that I've curated from the Hollies triggers today, about 4 of them I want to pull out of there, and then a new scan that we're going to talk about, and I'll talk about what that new scan is looking to. And I have a few scans, price alerts that will set off of a chart, off of a daily chart from that. And then time permitting, maybe a couple of chart requests at the end. So let's just go ahead and get right into it here. I will start with our market recap. I'll go where I usually go, which is the S&P 500 or the SPY ETF, SPY. Now, at last, we didn't have a Tuesday webinar last week. I recall it was canceled. However, we did have a Monday webinar, and I remember talking to Jamie's audience. Let's see, 1, 2, 3, 4, 5, 6. It was this day right here. Now, I said we had nice 3 green pushing up in the S&P. This orange line right there is our new all-time high target. And when you're fishing around this close in the neighborhood, like the S&Ps are, you're just not going to you're not going to leave without stopping by and saying hi over here to see what happens. In other words, when the price action is this close to something that is so obvious to everybody, it's almost a foregone conclusion that the price action is going to find a way to go and test it. Well, I said last week in Jamie's webinar that after 3 green days here, we could have used some consolidation, and we got kind of what the doctor ordered. We got 3 days of sideways, a little gap down on some bad Turkey overseas news in Turkey and their problems they're having with their currency. And then a little bit of sell-off yesterday and bounced right back today. Notice we bounced right back off of that 20-day moving average for the most part. So this definitely satisfies a backing and filling. We have hopefully, for the bull's sake, I say hopefully, created a higher low here with yesterday's low and today's low, digging in from the higher low last week and digging in from the higher low last month. So the case can be made without a doubt that this was enough pullback after a nice push out of that range. We may be just a day or 2 away from assaulting all-time highs. Now, once we get to all-time highs and once we get maybe a penny or a dime through all-time highs, that's where all bets are off. I'm just sitting here saying to you today, in my experience, the way that price action's trading right now, the S&Ps are going to want to test all-time highs. But once they get through, or if they even don't get through all-time highs and just get buckled up there, your guess is as good as mine as to what happens. Is there going to be a giant a wave of selling coming in? I don't know, but the theory would hold true. If we can break through all-time high and then close on that same day, that's what I'll be watching for if and when we get to that day. If we can close on highs with a nice green bar above that orange line on the top, which again is all-time highs in the S&P. So no harm, no foul with the last couple of days of pullback. We seem to have maybe found a base, and we can push through. I just feel like this is going to happen sooner or later, probably this week. Over in the NASDAQ land, QQQ ETF, pretty similar. I mean, this little pop back here was a pop to all-time highs in the NASDAQ, and then we pulled right back, kind of like what I was saying a minute ago in the spiders. Once it breaks through, all bets are off. We need to see how the market reacts. A lot of times, once you get through that level, you can take a really good couple, 3 days back, and that's what the NASDAQ did. And notice again, this blue line is the 50-period moving average, and that has been showing good signs of a backstop and giving us a place to lean on as we have a higher low here off of that blue line. 50-day moving average went to all-time highs, and like I said, snuck it right back, pulled the rug a little bit, and then built a higher base camp again at the 50-day moving average, and then pulled back again 3 days ago. Nice little tight range of consolidation up here. I feel again it's probably a foregone conclusion that the market's going to want to go up here and test this line once again, probably sooner rather than later. After this little consolidation we've got here in this area. So there's virtually no bear case that I can sit here and talk about. You could theorize about if this happens or if that happens, but I don't do that. I look at the price action and what it's telling us currently, and the footprints in the sand are telling this price tracker that there is no bearish case at the moment. NASDAQ's above all key averages, pulling back, a little tiny cup and handle here. It's going to want to push and see what happens if it can get back through all-time highs this week, maybe tomorrow. We're pretty close. So there's no bearish case to be made here, guys. If there was one, I would give you a caveat or something to keep an eye on, but I'm really not seeing anything. I'm just seeing a normal trend moving higher, trying to assault all-time highs. If we get back to the smaller ETFs like the IWM, well, I'm starting to see a pretty good wedge being built here for the most part.
I was just going to say that, yeah.
Yeah, I'm not going to draw. I'll fumble around for 5 minutes trying to get the lines to line up. But, you know, the downside coming off of here and the upside kind of coming sloping down from here. It's painting itself into a corner. So remember, the IWM is the Russell 2000 or small cap stocks. So keep an eye, on what happens there. If we do get a day where the IWM is leading and breaking out of this wedge and is up more than the others on a percent basis, it might be a top-down approach to look at that and say, maybe I should focus my attention today on longs only in the small cap land. Again, I'm getting ahead of myself. I'm saying if there comes a day where the IWM really leads and pushes higher up out of this wedge, that could be a great day to focus on small cap stocks. And lastly, the Dow, the industrials, very similar to what we've seen everywhere else, the 3 days and then the gap down in the 3 days trying to dig in. But this one's doing it in a much more apathetic manner. I mean, we're not even close to all-time highs here in the Dow. So, but it hasn't really been, it's been a long time since people really looked at the Dow as the leading indicator. Now it's all about SPY and it's all about the NASDAQ. So I try not to get too bogged down with that. And that's, I think, kind of all I have to say. Am I missing anything?
No, you hit it pretty good. I mean, can be a very slow. This is the slowest time of the year, guys. Just to remind you, the last 2 weeks in August and the first week of September can really be a drag. And with earnings season kind of winding down, we're gonna need, probably need some macro news to really, not so much to hit all-time highs, but to, it's been a grind all summer, especially for the spiders. The Qs and IWM have been performing a little bit better, but yeah, I mean, everything you said is correct. There's no bearish narrative that can really be made here, and the spiders. I'm surprised they didn't try to tickle it the last time they were up there. 3 days there, they fought with the bears and they could not, get it to move. So we'll see what happens. Steve's right in every sense of the word that this is a bullish tape, but yeah, I kind of want to see us break out in the spiders. Not so much the IWM and the Qs, but I want to see the spiders take out that all-time high. And
we going sideways might have worked, but then we had that really bad news out of Turkey, and so
Turkey, correct.
Big gap down, and then we're just kind of recovering from that. Now today's green bar is saying to Turkey. What Turkey? I don't know. Care about no Turkey. So that's where we are, guys. No bearish case. Still quiet volumes in the summer, but slowly marching higher, building base camps, higher base camps, higher lows along the way. All right, so that being said, where do we go here? We're going to go to, the Holly recap. You want my screen or do you want to take it?
I'll take it. Yeah, let me take it real quick here. All right, can you see?
Not yet.
Oh,
Still can't see.
I don't know why it's not. Got
Now
it
we
clicked
can.
on. Okay,
Now.
yeah, it was having it taking its time.
Hmm.
So you got it now, right?
Yep. Yep.
All right. All right, guys. One thing I want to point out today is all of Holly's, of course, she did come to the party with mostly longs. As you can see there in Neo, only had one short strategy. I'm not going to go through them all three of them right now, so just trust me, they were predominantly long strategies that made the cut for the day. For those of you who may be in here for the first time and asking what does make the cut mean, it means that we have about 50 strategies and we run them through the combine, we like to call it, and our AI will grab these strategies and backtest and optimize them over and over and over through all their filter sets using our artificial intelligence. And then they have to make a certain winning percentage and a certain profit factor to be on the team for today. In other words, for them to be listed in this AI strategies windows. And then she will only fire out alerts from these strategies. Well, what was happening this morning? The market opened up. I have it on the spiders here. You can see there's a little gap up. And basically for the first, 45 minutes, there wasn't a whole lot going on in the market. As a matter of fact, we tried to, fill the gap. We actually have to come down here to fill the gap, and we didn't do that. But nonetheless, it was pretty sloppy with kind of a little first 45 minutes, kind of a lot of scary action. During that time, Holly was consistently throwing out longs, long after long. You can see right here, starting at 42, all the way to 9. Let's call it 9:30. Just what is that? Probably a dozen longs. And when I go over to the Holly Grail or Holly Original, whichever you want to call it, same scenario. All loans being fired. And 2.0, I believe, was the same way. So I mentioning this, he was like, wow, this is kind of scary. All these longs in the market fear lows. And then what happened is what we call directional bias, guys. Even though the tape, the overall averages were showing, some jittery action and with a scare to the downside, the setups were all adding up for long strategies. In other words, all of the filter sets were being met and they were firing off alerts based on long positions. So when you see things like that, guys, take note of it, because what happened is we put in a big old tail here, and then we bounced and we moved higher from it, and really kind of held that trend all day, although we kind of didn't really go anywhere from here on out. But still, a green candle, and Holly was firing out all along. stop.
You want to explain what a horseshoe is in our vernacular?
Yeah, a horseshoe, and you saw this when a stock gaps up and then fills part of the gap, but not all of it. Morning, and then retraces, and it's going to goes back to highs. So that would be a horseshoe. It usually makes, you can picture it, a little horseshoe pattern. Horseshoe, that looked like a good pattern to me, but just especially when gas was probably weak on the day. No, just really not a whole lot, but it was strong. Did horse, we know that. Right, I do want to show a few trades from Holy Grail, because we had a couple. This is what we call double confirmation, guys. We had a couple go off. One at 1028, but what happened? The strategy float on, and what happened? It failed. 10 minutes later, the vault. We all know and love the vault. Came right back down. Well, this is a beautiful trade, and if you look at it here, you can see, and there it looks good on the daily. Looks like it's breaking out of a 2 is your stop hit. Month range, just maybe 6 weeks range there. There is your trigger. All right, it looks like we got combined both triggers in here. But the first one was float on, it triggered at 29.12. There you're seeing it. The other one triggered at 29.09. So it's weird. This one came later, but you got a better price. So all those who argue that you can't catch these, you can see right here, this entry time was 10 minutes after that one, and it was a better price. Doesn't, okay, so obviously the risk off is a little different. But anyway, some great trades there. Look at the risk on these two columns. Just very nice alpha being generated there. It had some stop hits in this one. Not all winning trades, so we did have some stop hits. This one I can see you want to see another kind of fail horseshoe trying. There you go. You got your gap up and tried to rotate around, and that's where I thought it popped up and then came right back down. And that is an ugly count. All right, Steve, I think that's going to wrap it up. Unless there's something that you wanted to point out there. I know there's some other great trades, but I'm just trying to speed things up here for you because I know you have stuff to go over.
No, okay. I was just talking to somebody. Tony was saying he didn't have a hard time finding the invite to the webinar. Make sure, guys, especially if you're on Yahoo Mail or Gmail or those webmails, make sure you get your spam folders or your other folders, because sometimes those invites might sneak in to the back door there. Yeah, let me take it back, because I'm going to go right on the heels of what you're talking about here. I'm going to keep the ZUO chart on the screen, and does it, I don't know how to lead into this. I know you know the answer, Andy, but many times, in the morning, you and I and Jamie and John, everybody start talking about, Holly's turn her sea legs. One of them's red and two of them are green. But I'll be darned if it doesn't seem like more often than not, Andy, the time you head into midday and start heading into the second half of the day, those values just start to turn green and just turn really ripe, which tells me that, from my observations, that's what I'm going on clearly on here. It's just my observations, and thinking back in time, it sure seems like the risk on working a lot better than risk off, and I kept it on ZUO here for a prime example. Look at this thing. Nice 30 minutes, and then 40 minutes, took a few people out, and then for the rest of the day, well, risk on. And it just seems like this has been the case for the most part, especially on the new AIs, Holly 2.0 and Holly Neo. Well, you can sit here and take my word for it, or I can dial you in maybe to some back office information. Let's take a look. So this one is Holly 2.0. Put that aside for a second. This is risk off, so this is following the ins and the outs all day long, so you would have taken a smaller like in ZUO today, but along the way, the aggregates do add up, and it is performing better. But what if we looked at 2.0 and said, 2.0, you really seem to leave a lot on the table. And then back at the end of May is when these charts are started. It's proving my theory visually. The risk on Holly 2.0, it's just knocking out of the park, for lack of a better word. I mean, so Holly 2.0, going back to its inception, which is May 31st of this year, guys, the risk on aggregate totals are running circles around the risk off aggregate totals, getting out with Holly. Okay, so I think we can deduce that Holly 2.0 has been performing much better over the last few months in the risk-on fashion, letting these things get their sea legs and letting them mature throughout the trading day. What about Holly Neo? What's going on over there? Well, here's Holly Neo risk off. Got off to a difficult start, but then still outperforming, but not by much on the risk off category. But good old risk on, holding those trades into the close, is just crushing it again. So I wanted to give you guys a visual proof, back up some soft here of my belief and my contention that the AI seems to get in a slow start during the days and seems to find its sea legs and seems to find its stride going into the second half of the day. These risk-on totals are definitely confirming my suspicion. So I just wanted you guys all to imprint on those. Not something we show very often. It's part of our proprietary back office, but it did bolster my theory, my thesis, and I wanted to show that. So what do you think of that, Andy?
That's very impressive. Yes.
Does it jive with what you've been seeing kind of along the way?
Yeah. And really looking at that Zuo chart, guys, and I've talked about this in my webinars. It's a hard thing to do, especially when you look at that pullback of Zuo. Basically, you're letting the winner, come all the way down to flat. But thus getting to the strategy, guys, if you can learn to take maybe half off and then let the other half run for you, because trust me, guys, Steve and I both been trading for a very long time, and okay, the real money is made in the holds for 2 or 3 hours, not 2 or 3 minutes. It's tough to do because you see those profits, you want to take them. You hear the old line that no one ever goes broke taking profits, but it's true. But I followed up with no one ever gets rich by taking profits too quick. And so once you get to a habit of letting trades work for you, even if you have to just take it off your screen, that's what I started doing. I wouldn't even look at it. Put the stop in or usually on alert, so I wouldn't get keyed out, and learn to let these stocks work for you, because that's where you start making the really good money.
Yeah, my favorite thing is the bird in the hands, worth two in the bush. But the problem is, to be successful and actually grow your account, you need two in the bush. Mm-hmm. And so Andy brings up a great point. It's so hard to want to sit through these things. Well, maybe through your full size it might be, but again, guys, consider selling half. And I'm going to show you a great statistical probability here that Holly 2.0 and Holly Neo are statistically proving themselves to work throughout the entire day. So it means selling half to where that's the only way you can hang on to at least a portion of it. Remaining half is better than no half, but selling half is what it takes, to get you to not wig out for an initial pullback and have faith and trust that by the end of the day we might see some better results. Then that's what needs to be done. Sell half. That's what needs to be done.
Tony's asking, what was that? I'm sorry.
This one is Zuo. It's ZUHO. It had 2 triggers on Holly, the Holly Grail original. In a profit save mode. But what I'm saying is the data points I just showed you here says that these Holly 2.0 and Holly Neo, if you want to let them breathe a little bit beyond the timed stop of the AI and see if risk on can deliver some more profits to you, this was a great example to do so. And again, the coloring shows the moment that the AI cut this trade for a smaller winner than it could have, as basically a trailing stop, as a trailing stop algorithm for risk management. Okay, maybe I was confusing you. So, sorry when you talked about not being stopped out. Yeah, I don't remember what train of thought I was on as I was speaking, but the whole idea is if you can stick around for, for bigger moves, and that's why I wanted to show you guys the data and the numbers behind a Holly 2.0 and Holly Neo. There seems to be some edge in letting those things marinate and work for you. Oh, here's that word, I said it. All right, please expand the difference between risk on and risk off. It's pretty simple. Risk off is when the AI exits the trade because the AI is only going to be in for 60 minutes, 45 minutes, 2 hours, what have you. But we continue to calculate that same entry point all the way into the bell. So here, 39 cents was what Holly made in the risk off because the AI exited under a trailing stop. Same thing happened in the other one. Same stock, Holly made 40 cents in the risk off. But if we move over here to the risk on column, these are the values that are the aggregate sum total of these same trades right at the bell today. So risk on takes those same trades into the bell and shows us, was there more meat on the bone to hang in for, or is this a quick hit, get in, get out type market? So hopefully that explanation helps. All right, so Holly 2.0 and Holly Neo, if you can trust the numbers, they've been showing us for a few months now that the risk on column seems to have better totals than the risk off. Again, risk off is exiting at the same time the AI does during the intraday. And then as to Waleed's point, you could let that thing work for you. Ideally, in hindsight, it's perfect. We can look back and see everything, but in the real moment, we don't know what's going to happen next. So yeah, after this particular move right here, a nice big green bar up, and then a red bar when going sideways, you could come in and maybe put a trailing stop underneath that red bar right there and try and lock in what you have and hope for higher prices, which is what certainly happened there. All right, so moving on, again, I wanted to talk about the charting in Holly, which we did. All right, so now let's go to trade of the week. Backing up 1 week, we didn't have a trade of the week webinar last week, but we did have a trade of the week call, and it was a kind of a goofy one. Let's talk a little bit about it. Let me see if I can, for the most part, all I had was a green candle and that little wick going up. We did not have these other green candles coming in. And this was an idea of trying to buy a long basing stock. Retail's been pretty strong lately. This was the earnings down here. Earnings was one last final shakeout of the weak hands, put in a nice little kind of a head and shoulders bottom there. A bracket bottom, and then we're moving on. But the idea and where we got tripped up a little bit was not to come in and buy. I wish I could really, let me see if I can just get that lined up perfectly with what we were looking at on, well, forget this green bar here because this was Monday of last week. We had a little topping tail there, and I figured the safest entry for a trade of the week would be prior resistance becomes future support, the old pivot line that I talk ad nauseum about. So the idea of the trade of the week was to try and get a little tricky, and obviously in hindsight we tried to get a little too tricky, didn't we? Wait for a day or two pullback and get a better price, because after a big push through and a little topping tail, Andy and I, sometimes we used to have a rule in our mirrored ditto trade account that we ran for people many years ago. We would say day and a half, stock got its move, day and a half. It's going to give you, and it's almost like the news cycle out there. It seems like things go for about a day and a half and then they move on to something else. Well, as it was, we had a day and a half move, and it looked like we could easily come back and settle. And again, mind you, this is a high short float, so these are short sellers trying to get out of this thing. Well, we tried to get a little tricky by calling that. I'm not always comfortable calling it long after kind of a little mini topping tail like that because I'm not really practicing what I preach. So we put in a little pullback and see if we could get hit. Well, wouldn't you know it, the stock is stronger than we probably anticipated. Maybe it was the long base it was coming out of. Maybe it's the entirely large short float at 37%, but it never pulled back and gave us an entry and just took off. Well, fast forward, and now here we are. So that entry is pretty much out of the works now. We can just pretty much forget about that entry. But what we still have is a stock that's coming up out of a base, and it's doing it with a short float. So there's probably a short squeeze going on here. And look at this. It does not want to pull back. I mean, we were lucky to maybe get 3 days of sideways action, and now it's peeking its head up above here again. So I'm actually going to mark this one up and add this to the mix. High of 48.08. We're going to go 48.09. And we could call this the second mouse gets the cheese. Trade of the week. Second mouse gets the cheese, because I don't think that first level is going to pull back very much. But the idea being here is I like what it's doing now. It's the same thing I'm always looking for. A move up, sideways action to blow off all the energy you expended getting up, free, hot shower, a couple of hot meals for the troops, and they're ready to go back to battle. Well, tomorrow, if we take out this high today, there could be some some more travel. If I look back here, there will be a resistance point at that level, but if we can get above that 49.23 level, it's clear gap sailing back here in the history. Remember, when you're looking at daily charts, you want to look back and see where has the price come, from where has it come, and to where will it be going. And so if we can get back above these levels with a really nice congestion, we might have a second opportunity to make a swing trade here and maybe fill a gap. So that's the long and the short of last week's trade of the week. Technically, it didn't fire because we didn't get that pullback to the levels we were looking for, which was right about here. But it's showing strength, and it might want to come out of this sideways action with some more strength. Maybe if it pushes through, we can go back to that day and a half. Just remember, guys, when a stock gets its move and has a giant green candle and closes that green candle on highs, a lot of times what happens is the next day the price action continues that momentum from the prior day, but maybe only goes an hour or two into the next session before it does a intraday midday reversal, as the short-term guys go, wow, that was a great profit, I'm going to start taking my bird in the hands, you know. And so if you're really wondering if there's a great way to peg a stock once it's making its move and breaking through, a day and a half seems to be a good day to maybe see if you can let it run for that long. All right, am I missing any questions here? No, I think we're caught up, right? All right,
you got it.
That brings us to this week, and this week was a little different as I tried to really spell out in the email. This is an IPO, this is a new issue, and this was not located on anything else other than Holly. Look at the buy tag on that green candle on Friday. Holly saw basically a stock that was going down 4 or 5 days in a row and then did a bar reversal right about there. And so the AI saw something of interest. I saw something of interest and thought, you know, it might be time for maybe a little bit of volatility. Maybe we can get something to really move in our direction. Well, it did in fact trigger the high of that green bar, but it's still holding on. And again, I prefaced that email that went out, you know, consider using a smaller share size than you normally would, because these IPOs or these new issues, they don't have much to go on. There's definitely not a lot of fundamental analysis for the fundamental guys to get their hands around. So it's pure technical price action. And this thing just came out of the gate with its very first trade a couple, 7-8 days ago. It's going to be volatile, like a rubber band, and so it's going to have its volatility. So that was one of the things we tried to definitely convey, was to adjust for the volatility of a new issue by downsizing. If you're normally trading like 500 shares or something like this, maybe go to 300 shares. So not really happy with the way it didn't follow through yesterday, but it's still holding on today. Basically, the out is the low of this red bar back here, because Andy and I definitely learned that if we were to take out this low right here, the low of the very first trading day is not far behind. And I'll go back to the beginning of our discussion today. When price action gets in the neighborhood, if it doesn't stop by and say hello, there's something wrong with it. So if the price action drops below this price, this low of this candle, it's probably a foregone conclusion that the price action is going to try and challenge the low of the first day of trading. But we only had this green bar and a Holly buy tag and a simple bar reversal. Pretty clean chart. Tried to keep it simple, but dial it back a little bit because of the volatility, and it's just not going in our direction today. That could change tomorrow. Let me leave you with one possible scenario, which I just hate, but it's very real. Again, our stop loss here is right around 1650. All right, now there's probably people out there that have put their stop loss into their broker, and their broker has so benevolently sold them out to market making algos, Citadel, Virtue, etc., and made money on you placing a good till canceled stop order to protect your money, but there's your broker selling you out and making money on you. So don't think that your good till canceled stop orders are hidden, because they're not. So what I'm getting at is here, I would not be surprised tomorrow to see the opening price action as all the algorithms come in and take the overnight stop orders and drive it down at 1650, maybe 1640, maybe below, and then pop it right back up. Well, it's a tough scenario to have to withstand. The only thing you can do is literally pull your good till canceled stop and babysit the price action. Because I can tell you from experience, by the time they go down and hit that level, if you had pulled your stop, right about the time you're about ready to start sweating and thinking, oh boy, what am I going to do here? The price starts to bounce. I mean, these things happen in the blink of an eye, right in the first 3-5 minutes of the open. So if you're somebody who's, a little adept at maneuvering, and you don't want to get stopped out by literally handing your stop order overnight from your broker, who will sell that out on a spreadsheet, to all the market making algos out there. I know it's not fair, but it is what it is. If you don't want to be a part of that, you might have to pull your stop order and manage it manually. And again, more often than not, when that happens on those stop hunts, they don't go too far before they rebound pretty quickly. And if you can survive that, if you play craps in the casinos, we used to call that surviving the come out roll. If you can survive that first roll, you're in the game. So just be aware that very well could happen tomorrow. I don't want to see it happen. I won't be happy if it happens, but I want to prepare you guys that it could happen. All right. Anything you want to add, Andy, besides why were you picking a new issue? When I go out of town, what are you doing when I go out of town? I'm sorry, I was talking. What'd you say?
You covered that thoroughly.
Yeah, I covered it thoroughly. All right, so that is the trade of the week, two of them. The other one we marked up. And let me think where we're going from here. Okay, we got good time. So I took the liberty of marking up a few trades. I'm not going to go find them individually, but they're in the Holly segments here. I've pulled 4 of them. And I've pulled 4 stocks from another scan that I don't have on my screen here because I don't want to tease you with it too much, but it's something that most of the credit, all the credit really goes to Andy. He created a filter that kind of gives a composite score without giving away the identities of each composite within that rating. It's a pretty good way, kind of like the IBD 50. Well, I don't know, we'll call it the Trade Ideas composite rating, but it's a proprietary stack of custom formulas that look at where the position is and other things and gives it a rating. And we started playing around with that scan for the first time today. And ideally in a couple weeks, maybe 3 weeks, we'll have that set as a new filter, the composite rating filter. But for now, I just want to show you a couple things and maybe help a few people mark up some charts, and then I will share those price alerts with you as well. So let's start with the 4 that I found from the AI today that caught my eye, that I want to keep an eye on going forward. So I will just mark them up in the price alerts fashion. Let me get rid of these because I know what I'm talking about here. All right, the first one that was derived from Holly today is SRG. That's my initials. Okay, really nice push, probably earnings. Let's take a look. 7 days back, 1, 2, 3, 4, 5, 6. It was actually before earnings. So came out of this range on a gap. This gap looks like it has no intention of being filled. Again, sideways action after a big move. Hey, look at this, guys, 1.5 days. Here's your 1 day. Here's your 2nd day. And then there's the reversal. So 1.5 days is actually showing up there on that chart for the momentum. But what I like is the 5 or 6 days of sideways action and this moving average, the 10 period, coming up to force the action. Didn't even have to touch the candles before it started pushing the prices higher. So what I'm going to do is just go up here at the high end of this candle. We're going to mark that one up, and it may take a day or two to get there, but 50, 49. So we'll go 50, 50. We'll say Holly trade. And we're going to go at 50, 50. Set that alert and forget it. All right, the next one is EOLS that derived from Holly today. What I'm liking here is the AI has seen 2 things in the recent history that it kind of likes, intraday hiccups of volume or what have you. But when you marry that up with a very tight range that we have here, just dancing dojis, 1, 2, 3, 4, 5, 6, about six or 7 days. It's a pretty tight range. It actually closed on the low end of its range today, but that doesn't bother me. I'm going to go ahead and I'm just going to look at these past few days and the high of this candle, 2113. I'm sorry, 2130. So we'll go 2131, and we'll say derived from Holly. All right. Tandem, TNDM, is another one I noticed today from Holly, and this one's more of a trend play. And here's our 2 or 3 days of selling, pulling back, some sideways action, and look at what my friend, the 10-period moving average, has to say about the price action. It's kicking it back up into the sky, back into play. I think if this thing gets ahead of this high candle, I'd like to know about it. 33.93, so we'll go 94. 33.94, and again, this is also a Holly trade that we're looking to find a possible swing trade that was brought to our attention. All right, and the last of the Hollies is NTRI that I found interesting. Same kind of a thing, above its averages for the most part. Decent trend coming off of its lows down here, higher highs. Big, that's probably the, yeah, that's the earnings date candle right there. and moving higher. Another big green candle, and 1, 2, 3, 4, 5, 6, 7 days of consolidation. Nice little wick down there on yesterday's red tail, and now we're back to a nice bar reversal and green. So I'm going to put this above today's high, and there could be some follow through on this one as well. So we'll go 41.75, 76, looks like. 41.76. All right, so those are the ones that I found of interest from Holly today, and those are on my price alerts, and I'll be sharing these price alerts. So now I've got 4 that I really liked off of Andy's new scan, and we'll, like I said, hopefully in a couple of weeks we'll have a working copy that we can start handing out. The first one is PAYC. I think you guys see what's going on here. Earnings back here, big gap up. Two solid days, not even a day and a half, 2 solid days, and then a good 6, 7 days of sideways action. The best of all consolidation, because it didn't give back any price. It just went sideways, giving the troops a warm shower and a warm meal, waiting for the 10-period moving average to catch up, which it did today. As soon as it touched that price action, it popped right back up and is breaking out of that range. So actually, the ideal place would have been to buy that on the close probably, as it was breaking out of that range. But since we're a little late, we'll just have to wait and see if there's some follow through tomorrow at 138.19. 138.19, and this is off of the TI composite. And they'll be talking a lot more about this as we go forward in the weeks to come. So that was the first one. What else did I like? I liked the ISRG off of the Trade Ideas composite.
And Steve, feel free to show the window if you want to too. There's no problem with that. You know, with the composite, you know, if you want to, so they can see that.
I've got 2 of them. I've got one of them with a big composite rating and a high short float, and then I've got just the regular one that you gave me, which is right here. So it's called the composite rating, and if you'll notice when we go to configure, everything is really built into the composite filter itself. That's all I've got. U3 happens to be my custom filter, which is now called the composite rating. And where did it go? Is that? Oh, well, for some reason it's called open versus low. I need to change that. That's not right. But there's my filter U3 set at 90. So 90 is the minimum score. Every stock has a score going through that composite, and we only want to see the stocks in the 90s. So, my gosh, let's see.
No, yeah, you don't have to find them. No, I would just.
But it's going to be something like this, guys. Just a simple top list with a lot of stocks, and if I click through them, they're going to be in an uptrend. I can pretty much guarantee you that. They're going to be at least above their moving averages. They're going to be good on the fundamental side. There's some fundamental filters in there as well for these composite readings. So a lot of work was put into that, and we're getting close to being able to have that in production. All right, so ISRG, I didn't quite finish that one. So a little cup and handle here. It's kind of pulling out. I call this kind of the bird in the hand. You can see it's just resting on these moving averages, just looking for a reason, honestly, to probably go up here and assault those levels. This is a very high price stock though, isn't it? I think I'm going to leave this one off the list. These $530. I'm going to leave that one off, but I want to talk about it nonetheless. INGN. Okay, so I mentioned Andy earlier. Andy, can you explain to them what a horseshoe is? Well, a horseshoe, I'm here to tell you, is fractal. It can show up on a 5-minute chart. It can show up on a 15-minute chart, and it can show up on a daily chart, right? Here's our gap up, went all the way up to 241, another high price, pulled back, didn't quite get the full gap fill, and now it's turning like it wants to head back up north. Well, this is the early adoption or the early formation of what could be called a horseshoe. If we get another green candle tomorrow, it comes back up to highs, we have a U-shaped pattern here. I like these on the 15-minute chart. I like these on the daily. If you're going to swing trade and you can find stocks that had great news, gapped up, couldn't give more than half of the gap back before buyers jump in and turn back up and start driving it higher. These are excellent setups. So we're going to go 231.53 is the trigger on this one. 231.53, and I apologize for some of these stocks being way up there, but I know people like stocks under $50. The last one is Illumina. Illuminati.
Oh,
yeah, they're right down the street from me. Dang it, ILMN. There we go. All right, so again, another nice, another $300 stock. Yeah. Another high price stock, but these are the ones that are coming through Andy. Blame Andy. They're the ones coming through the deposit rating. So these are strong stocks for a reason, but here's another textbook, beautiful daily chart. Looks like there's our earnings, 3 days down, and then boom, earnings surprised, 10 days. I'm looking at that 10-day value right there. So we had earnings, a push up, and then 3 days of pullback, settling in. Almost did a bar reversal today. I'm going to put a bar reversal basically at yesterday's high, and then we'll call that a bar reversal if it does trigger tomorrow. 33224. 24. Okay. Composite. All right. How do I analyze the gaps up and down? See, the problem with Twitter is you're going to make me start speaking how I really feel about the company and everything involved, and deviating away from what I should be looking at. What I was looking at with Twitter last week was that it couldn't even find itself a nice dead cat bounce. Horrible earnings, gap down. We're not even close to getting close to the bottom of that gap. I'm just not liking this stock. And again, I'm probably not the right person to ask because I've got a bit of a grudge against them right now with their business model and the way they're censoring a lot of people. So I think I'm probably not the only one who feels that way, and that might be showing up in this ugly price action. If Twitter can get back above this 33.68 and hold a price close above that level, then maybe you're back in the game a little bit. But until it can get back above there, I probably wouldn't be interested in it. I know, David, everybody's waiting with bated breath on the composite filter. It's going to be fun. Let's see, INGN price variance. So I guess that was it for the price alerts. Here's what I'm gonna do. I'm gonna go ahead and share those now so I can just talk out because we got just a couple minutes left and give people some time to absorb the price alerts. So I gotta go to my price alerts. I think I blew past it. I gotta clean this up. I got way too much stuff in here. There it is, P, price alerts. There they are. Look at them all working. So I'm gonna pass these along to you guys and share 8 selected price alerts, copy the code, and then I'm just going to drop the code now into the chat window. I'll title it 8 price alerts for you and control paste. All right. I had mentioned we'd look at a chart. I think we just looked at Twitter for the most part and kind of gave you a pretty good synopsis of what that one needs. What I'm watching to the downside in Twitter is this 200-day moving average, which is goofing on me here at the moment. Let me retype it. That 200-day moving average is going to have to hold, and we're getting kind of close to it. So if Twitter rolls over and has a couple bad days here and then winds up closing below that 200, that's going to be a technical siren, bearish siren for me. But again, this is a bad stock for me to try and comment on. There was another one somebody asked about, INGN. Was that one that we were doing?
I think so.
Yes, it was. Yeah, another one. Okay, so there's the other horseshoe. Hey, if somebody has one stock they want to end on, we'll go ahead and take a look at it, but we're just a couple minutes close to the top of the hour here. I had mentioned earlier we might look at a chart or two, but we've definitely looked at a few here the last 15 minutes or so. But again, that daily chart horseshoe potential is really interesting. You guys should imprint on that, because I'll tell you what, when Weight Watchers took off last year and just blew the shorts out of the water, this is one of the first things it did. It gapped up after earnings. The sellers came in and tried to sell the earnings, and the buyers said, no, not this time. We're not even going to let you fill the gap. We're going to start pushing it back up. And this right here is the early warning signs of a possible nice possibility that the stock is going to want to head back and test those highs. All right, so I think we're good. Let's go ahead.
Tony wanted to look at Yelp.
Oh, how did I miss that? Okay, we'll look at Yelp, and then we are out of here. Obviously, it had earnings 3 days ago. There's our 3.5 days ago. Pulled back to this level. Now, maybe if we've been looking at other charts here that had their earnings, they could only get so much of a pullback, and look at how it corresponds over here to these levels. So this level was prior resistance, gapped up, traded through, came back, and now that level is acting as sort of support. If we only have 1 day to go on here, that doesn't mean we can't turn around and fall back tomorrow. But if you watch this level closely, 46.75, and maybe another sideways day tomorrow at that level, I wouldn't be afraid of maybe taking a starter position in something like this. This was a blowout candle of volume. Obviously, these earnings were priced incorrectly and caught the shorts leaning, and a big blast higher, and all they can do is pull it back from that. Here, day and a half, guys, day and a half. 1 candle, 2 candle, and midday sell-off. Let's take a look at that, of what it looks like intraday. Here's your day and a half. Big news, explode, green candle all day. Second day, more follow through, and midday, they're going to start taking profits. You see, that's why we really hammer on the day and a half or why I've hammered on that a lot today, because I see it a lot, especially stocks that are in motion. They're going to go a day and a half before the sellers start to get, or the short-term traders start to get a little antsy and start bailing out and taking profits. But that's not to say that it can't recover, as it's trying here. Yelp, big red candle, base building candle. Another small little narrow range candle would be perfect tomorrow to kind of set the stage for a nice base being built, and then you can set your price alert maybe off of this one right here, you know, at 46.80, 47.80. I mean, but that's assuming we get maybe another nice little consolidation candle tomorrow. Not a bad looking chart. The sellers were definitely caught on their heels over there on that one for sure. Okay. All right, I think we're good. So Scott, come on in and play us out.
Hey, yeah, thank you. So a couple items. We do have a podcast. Most of you should know about that by now. If you don't, just search for Trade Ideas Podcast in the app you use to listen to podcasts so you can subscribe to it and get the most recent episode. Look through the archives, find some interesting guests to listen to, and then stay tuned for the new one come out on Friday. We release them weekly. They're usually about 20 to 30 minutes. Good stuff. We've got an ebook. Both Andy and Steve participated in authoring chapters of this, so you should get it. Just plug your email address into the landing page at trade-ideas.com/ebook to get the download link delivered to your email inbox. It's got 5 strategies that are great for a rocky market when you can't just reliably buy the dip anymore. Timely for now, so keep those strategies in your repertoire. There's a discount code that's good this month. August Alpha. Just use that code all caps on your checkout to save 15% off your first month or year of Trade Ideas. And you can still use that to do an upgrade. So if you go to the upgrade path from your login on our homepage, you can just plug that in and save 15% off your first new installment of Premium when you upgrade from Standard. Thanks, everyone, for coming. We'll have an archive of this up tomorrow or tonight, and you get an email reminder when that's up about how to find the playback. Any questions, just shoot us an email to info@trade-ideas.com. That goes into our help desk software. Or you can follow Steve Gomez on Twitter at TodayTrader. Also have at Trade Ideas and some other handles. At QuantBot would be Jamie. Facebook.com/Trade Ideas is the page to like on Facebook so that you can share what we post with your buddies. Thanks, Steve. Thanks, Andy. Thank you all. We'll have a recording up later on. Bye.
All right, see you next time.
Thanks, everybody.